Millionaires and even billionaires aren't saving money into their savings accounts, but here's what they're doing instead. Okay, so why are millionaires using their bank accounts? Now, of course they've got bank accounts, they've got different things they'll do and they'll have it in different places. But for the most part, millionaires don't care to have a lot of money in the banks for a few reasons. One, because you don't earn anything in those bank accounts. That's a big reason. And then two, the other reason is because FDIC only is supposed to insure up to $250,000. FDIC only has about 1.5% of their reserves actually in their account. So of all the bank savings that they're supposed to be insuring, they can only insure 1.5%. So if 10% of banks fail, guess what? You're out. You're out of luck, right? You're going to be waiting a while before basically the government prints more money so then you can actually do something about it. And so you got to be careful when it comes to bank savings. Now, most average Americans, they have less than $250,000. They feel safe. They feel okay. But millionaires and billionaires, they know differently. They know that that's not the place to store it. So they will use things like brokerage accounts, right? They will have things like that. They'll often have family offices, managing their money. Family offices, though, usually have to have at least minimum 25 million of net worth before they even talk to you. Now there are some like virtual family offices and whatnot, but for the most part, you're looking at least 20 million plus in net worth before you actually have that advantage. However, the good news is you don't need to. Millionaires also don't trust the typical retirement accounts. It's not that they don't have them from time to time, but for the most part, they know that this thing's kind of done, right? Because remember, they have family offices. They're usually doing things in hedge funds or doing their own kind of funds, their own investing, and they're often investing in alternative investments. But 401ks, they don't do them for a few reasons. One, you really can't save enough in a 401k, especially if you're a millionaire or a billionaire. Two, certain types of retirement accounts like Roth IRAs, they're not allowed to do anyways. And the best bet they have is doing a backdoor Roth IRA, which is a bunch of hoops they have to jump through just to get that advantage. And even then, there's a lot of talk and chatter about Capitol Hill shutting those doors, right? Like closing that backdoor Roth so that people like the wealthy can't get those kind of tax advantages. So, and think of it this way too, 401ks and IRAs have zero tax advantage, zero. They don't have any real advantages to them because the truth is when you put money in, you're putting in with pre-tax dollars, right? What you're really doing is just deferring your income to a later date. Now, if you're a millionaire or a billionaire right now, do you trust that the government's going to lower your tax rate in the future? I mean, with the way the talk is going right now, more likely if you have more money, you're going to get taxed more in the future. And the truth is, a lot of us might actually get taxed more in the future just because of inflation alone. So putting your money in IRAs and 401ks make no real sense. Those typical retirement accounts they don't care about. Plus, are they really worried about retirement? Not so much. Are they worried about legacy and wealth? Yes, they are. But again, here's what they will do differently. So where are they investing instead? Well, they're going to do a few things. Like I mentioned, they have the family offices, they have brokerage accounts, they have some of those things too. But a lot of what they'll be using, they're going to use life insurance. Whole life insurance specifically they can use, and they can contribute massive amounts of money. For one, you don't have to worry about income limits. For example, if I want to invest in a Roth IRA, like I mentioned before, if I make income of roughly over $250,000 a year, I don't even qualify to use a Roth IRA. And so most of the stuff you see, Roth IRAs, 401ks, IRAs, are really meant for the low to middle class, right? The upper class don't really typically use these. They're using other vehicles. They're looking for tax-free vehicles. Life insurance is one of those. Life insurance has all the same tax advantages of a Roth IRA, but they don't care about those income limitations. In fact, the cool thing about about having life insurance is that you can contribute up to about 25% of your stated gross annual income. So let's just say that these multimillionaires, say they're making $10 million a year, that means they can roughly contribute up to $2.5 million a year. You can't do that in your IRAs and 401ks. They will block you, right? You can't usually contribute more than about $55,000, $60,000 a year in those things. But when it comes to this, yes, you can. You can actually contribute a lot more. And like I mentioned, you got all the tax advantages, and there's even a death benefit aspect to it as well that allows tax-free inheritance to pass on. So the great thing about life insurance is even if you die with it, even though you have this tax-free savings account inside of whole life specifically, even if you die with the life insurance, that passes on your heirs tax-free. It becomes part of the estate. Now, of course, somebody could argue this, say, well, if you're if you have over $26 million you're passing along, then you might get taxed on that surplus. It's true, you get taxed on your other assets. The life insurance part is tax-free, but it is part of that full net worth. But again, for most of us, we're probably not worried about hitting that $26 or $28 million limit, to pass on to our heirs and finally worry about estate taxes. You get a whole bunch of different issues so you get to that point. And so what they're doing is they're putting a lot of money inside of life insurance. And this is not something new. This is something that's been done for generation after generation after generation. For example, the Rothschilds. The Rothschilds treat their family plan like a business, right? They have a business interest in that. They have all their family members getting a policy, a life insurance policy, that will pay into the trust when they die. That helps fund the trust. That helps fund the overall family. But instead of creating trust fund babies, they actually make them pay it back. They say you borrow from your family trust and then pay it back with interest. Very much like what you would do if you got a life insurance loan. If you get a life insurance loan, even though you don't have to pay it back, there's no deadline other than your death to pay it back, and there's no minimum monthly payments, still, there is a loan outstanding that's charging interest. And at some point you have to pay it back, even if it's just with your death and the death benefit pays it off. Same thing with these heirs. Rothschilds did the same thing. We also saw the same thing with the Rockefellers, right? They're doing the same kind of deal where they're paying into this trust and letting it build and grow by borrowing from it, but then having to pay it back with interest so that your family's wealth continues to grow, especially as it starts to divide up. Unlike the Vanderbilts, because they didn't do a great job with this, and because they weren't teaching their children how to do this kind of stuff, what happens is that started to get split off, and the next thing you know, you have Anderson Cooper, who was only able to inherit $100 grand by the time it got filtered down to him. So the Vanderbilt's massive billions of wealth became nothing. That's the difference. So if you want to start saving like the millionaires do and actually become one yourself, or even a multi-millionaire yourself, here's what you do. Go to moneyripples.com/infinite-banking and check out, see how you could actually make this work in your life today.